And that is earnings. It is the busiest week of second quarter earnings season this week. 5 Dow companies reporting before the bell this morning. We have already heard from DuPont and United Technology, but investors are keeping a close eye on Caterpillar and McDonald's. This is the major market indices hover near all-time highs this morning. Take a look. Looking at a gain at the opening of trading. Joining the conversation right now, Charles Schwab, Senior Vice President, Chief Investment Strategist, Ann Sonders. Ann, good to see you. Thanks so much for joining us.
Thanks for having me.
How would you characterize the earnings season so far? Give us the backdrop for investing in stocks right now.
Sure. It's been great. A couple of interesting things. When we came into earnings season, we did not get the normal downdraft in expectations. So analysts maintain a bit more optimism heading in. So that was good news. And since we've had now about 120 companies report or so, it's about a 76% beat rate on bottom line, which is a great beat rate. More importantly, though, is that we've had a 73% beat rate on top-line growth. So much stronger top-line growth than anything we've seen really in this cycle so far.
Let me just point out that General Motors is just hitting the tape, and actually revenue is missing expectations. Is there a sector that's doing well and others that aren't? I mean, when you look at the auto sector, is this, and I don't want to ask you to analyze the GM quarter the second it hit the tape, but the revenue is below expectations. So if you could break down sectors.
Yeah, so the best sector in terms of bottom line beat rate, so earnings beat rate, has been the healthcare sector, actually. As of last Friday, I don't have the data through yesterday's close, it had a 100% beat rate. So every company within the healthcare space, and I don't know how many have reported so far, had beaten expectations. On the top line growth, on the revenue growth beat rate, it's the energy sector, which has had a 100% beat rate so far. Now, clearly, the absolute numbers for the energy sector, both bottom line and top line. In the case of bottom line, 500-some-odd% earnings growth because of that inflection point in oil prices and the tailwind that provides in year-over-year performance. But the other two sectors that have performed very well, both on bottom line and top line, are technology and financials.
Hey, Ann, earnings have been an underappreciated driver of the stock market this year. We talk so much about what's going on in Washington and the Fed and the Trump administration. We had double-digit earnings growth in the first quarter. Is the S&P 500 going to be able to keep that up in the second quarter, third quarter, fourth quarter? Is double-digit earning growth here to stay?
Well, it's interesting. You mentioned Washington. I've had a view, really since the election, that this latest phase in the bull market, the rally, if you want to call it that, really has had very little to do with the win by Trump, with the perspective of pro-growth policies. In fact, most analysts haven't touched their numbers, their out numbers. In other words, they haven't upped them because of a hope for things like tax reform or changes in the regulatory environment. So the fact that those are getting pushed further out, maybe into 2018, hasn't really affected the numbers. This is pure earnings growth that is not based on hope. And what's been happening so far this year is earnings growth has been at a pace greater than stock price appreciation, which means valuations have actually come down a little bit. Valuations are not cheap, but that's the kind of pattern which would be ideal for the market. And I think that could persist. I do think we're going to have some choppiness this summer.
Are we going to see the double-digit numbers sustained?
In the near term, yeah, I think, the energy sector is a big piece of it. So if we got a further downdraft in oil prices, then I think you'd start to have to put some haircuts on numbers for 2018. But leaving a major move down in oil prices, I think the estimates that are out there now into 2018 are still fairly reasonable.
We're just getting Caterpillar out, hitting the tape. John, you said this was one of the more important ones to watch this morning.
Right.
$1.49 a share is better than the estimate, which was $1.26, and revenue is also a beat at $11.3 billion versus an estimate of $10.9 billion. This is good news, Caterpillar, for the market.
That's very good news, because those are big beats, and that is a bellwether for the global economy. So I think what we're seeing there is better growth in China, better growth in Europe, better industrial growth around the world.
But, Ann, one issue that certainly the Journal has touched on repeatedly, and that's the complacency in the market. That with the volatility index at or near record lows, that we are 17 months in since a 5% decline or more in the S&P 500, and the average since World War II is 6 months between those declines. Aren't we due for kind of a nice sell-off here?
Well, if I could divine what the market does, I would take a 3 to 5% pullback in the market every couple of months. I would love a 2 steps forward, half a step back kind of pattern. You know, the timing is what's difficult about that. I'm not as worried about the VIX as some precursor to sort of doom and gloom in the market. It's just a reflection of what has been a low volatility market, and I think that's a reflection of the fact that we've had less economic volatility. So I think it's in keeping with the background conditions. But I do think there are seasonal reasons, there are some technical reasons that we could expect to see a bit more choppiness, maybe a pickup in volatility. Again, I don't think that would be a bad thing. I think it would kind of temper some of the other measures of sentiment, maybe keep a melt-up type scenario from taking hold, which, as lovely as those feel when you're in the midst of them, as we all know, they don't tend to end well.
You know, we're watching Caterpillar shares rally right now. The stock is up 5%, and as a result, this market is now at the highs, with the Dow Industrials expected to be up about 60 points at the opening of trading.